What's going on, guys? Today we're going to talk about ATER or Aterian. We're going to be talking about the short squeeze. We're going to be talking about how it's the #2 short squeeze score on Fintel, so it's the second likeliest to short squeeze. We're going to be talking about what happened yesterday with that sell-off, as well as where I see it going in the future. So without further ado, let's get right into the chart. You guys can see right here, in this hour, we saw a nice bounce from a low of about $11.60 to about $12.49. So if you were able to scalp on that, good for you. That was a good job. Yesterday, we saw this huge sell-off, something that did look unnatural at the time, and it really did get other people to panic. That's typically what does happen. See, the fact that there's a huge red sell-off here at 8 a.m., just doesn't seem to make too much sense, right? Because what retail investor is going to be doing that? There's low volume in the after hours. Typically, people only trade this type of stuff in the during the day, and the fact that we saw that huge candle that just perpetuated a huge sell-off in this stock was definitely suspicious. Definitely something I think might be short seller manipulation or hedge fund manipulation, whatever you guys want to call it. And yeah, if you guys enjoy this type of content, I ask that you guys leave that like on the video. It's very highly appreciated. It's the #1 thing you guys can actually do to help me out. So I hope I can get this one up before market close, but if not, this one will be considered the weekend update for ATER. So you guys can see this initial pump right here from about $3 a share up to around $10 per share. This was when about 50% of the shorts did cover, in my opinion, but there are still shorts remaining on it, about 50%. Yeah, the other 50% did remain, and that hasn't really changed. Now, there has been some changing of hands throughout this whole thing. We'll go into the Ortegs Data as of later, but we are at a point where there is a chance that some shorts could be in the money, which gives them more leverage, which is definitely a risk going forward for this stock. We've seen it before in other stocks. We'll see it again in ATER. You guys can see that box right there is essentially where shorts could have made money. Now, the cost to borrow on this stock is extremely high, so you got to be careful, but still, shorts could have definitely made money, especially if they got in on this price jump just about 2 days ago. And we can actually see how many shares were returned as of 2 days ago by looking at the Ortegs. But yeah, we did do an analysis on this just a few days ago, and we thought that there was this big push up to 20. I did think there would be a sell-off around $20 per share, but it seems like it started selling off around $19 a share this time. And I said this was potentially a dead cat bounce, what we were seeing here in this channel. It was just perfectly going through that channel, and then it broke out, and then it broke down. So that's kind of the unfortunate part sometimes about breaking out of a trend, because if you can't hold it, it just perpetuates it down. But again, I really do think this one candle here was just an unnatural selling candle that just doesn't make too much sense. And it's cool because this is a very bullish candle about to converge into a downtrend. So this is the saving grace for ATER, which is going on right now. So I hope it plays out well into this weekend. Let's look at the Ortegs data. Actually, first we'll look at the short squeeze signals. So there was 2 short squeeze signals signaled yesterday, and I believe this was pre-market, so it was before the huge sell-off. There was only one other time where ATER had a short squeeze signal, and it was correct, so I wouldn't think too highly of that signal. In terms of success rating, we can go into the Ortegs data. First off, you'll see 10.99% short interest change. Another 1.99 million shares were borrowed as of today, putting us up to 61.6% short interest. 14 million shares are currently being borrowed. Now, the daily volume is a lot higher than 14 million, so unfortunately, you can't really expect a short squeeze to move the price that well, but this is trading in an uptrend, and there could possibly be another push. And right now is currently probably the best price you'll get it at if there is another push. I mean, if you do scroll back all the way here, you can see that right now it's on that bounce line. You know, the support line, the diagonal uptrend line, the fact that we have a nice green push here in this current hour is a good chance that it could continue in this uptrend. And the fact that it has a 202% cost to borrow, that's probably the biggest figure that people are looking at. When I see these stocks go parabolic, whether it's bbig, whether it's sprt, whether it's GameStop, whether it's whatever stock you want to call it, Cost to borrow being high is always a huge indicator of what is going to happen, as well as the utilization being maxed out. Now currently it's not fully maxed out. 7 days ago it was more maxed out at 99.61%, but 97% is still high. And the fact that 2 million more shares were shorted today, that utilization can definitely go up very, very quickly. And the days to cover right here is 0.81. But if we move over to the chart, you guys can see we have to put the days to cover 3 months, which is what that figure was. And you can see it was about 0.7, 0.8. And then we go put the 2 weeks in, which is a more accurate estimate of what's going on, because the past 2 weeks has been much more volume than the past 3 months. You can see right here, way less volume in the first like 2/3 of the last 3 months. So the last 2 months, and then the last month we've seen insane volume. So that 2 weeks days to cover is more accurate at 0.18, which is very low, guys. I mean, I would not expect, if shorts were to cover, a huge jump in price, just because there shouldn't be. There shouldn't be. That's just how it works when days to cover is that low. And it's unfortunate, but this is a momentum stock. It's sticking to that trend, so it should be good. Anyways, we'll look at the on loan new and the on loan return. You guys can see on loan return is pretty low right now. And currently, over the past few days, there has been more on loan new than on loan return right there. There's about 800,000 on loan new, 174,000 on loan return. But the other days, it was pretty much a trading of hands, which does give new shorts higher cost bases, which gives shorts more leverage, which is definitely a risk. Every single day was pretty much a trade of hands, as you guys can see, if not a little bit more on loan new than on loan return. So their cost basis for these short sellers is going up, and we'll get rid of that real quick, and we'll take a look at the average age on loan, because the average age on loan has been pretty interesting, and we'll throw utilization up there as well. So on that initial push up to about $20 in price, that initial push that we saw, we're all the way over here. That's where we saw utilization and average age on loan go down. So that was the first sign of a short squeeze. You guys can see it went from 24 to about 21. Obviously not that big, but the utilization did go down to 90. Then it went right back up, and we currently have not seen that figure drop down as of yet. But we can look at the average age on loan of new and the average age on loan of returned, and we can see the average age on loan of the returned shares currently only about 7 days right here. 21 was the biggest spike. If we go back to a 3-month chart, you guys can see 69 days on loan was right here on September 9th, right before that big run up. So that's when the majority of the older shorts did get out of this stock. So that is something to pay attention to. There was already a run up where a lot of the older shorts did get out. So there was a lot more newer shorts in this stock with elevated prices, which definitely is a risk. I'm not saying they can't be squeezed, but it is a risk. Now we're going to take a look at the historical flow measures for ATER, and as you guys can see, the bullish versus bearish premiums is pretty much split 50-50. There's more calls than puts being traded currently. That means that people are shorting the in the money call options or out of the money. It could be either to get that bearish premium to go up. Another thing that we see here is that as of today on Friday, the call option volume has gone down significantly, which is scary. That's not something you want to see, especially if you want to see a gamma squeeze to occur. If people that have in the money call options sell that, then the liquidity crisis becomes less prevalent and there's less likely to be a gamma squeeze. 0.32 is the put to call ratio. It's been around 0.4 to 0.2, so that's pretty normal. We'll go into today's flow. This is taking in big bets, $100,000 or more. You guys can see that there are more puts being traded than the historical measure, and you guys can see the bullish versus bearish premiums pretty much split 50-50. We'll scroll down to take a look at the expiration date that's being traded, 10/15. This 10/15 date is a big expiration date for a lot of these short squeeze meme stocks. People are expecting a move fast. People are expecting a move quickly, and then it'll probably sell off greatly. If you look at the strike price, $10 strike price is a big one. $5 strike price is also a big one, and then the third largest is the $20 strike price. And we can take a look at the biggest bets. So right here we have a 10-15 $5.5 call option, 10-15 $5 call option, and then the 10-15 $10 call option. And we'll take a look here at the short squeeze score. You can see ATER still at that number 2 place for a short squeeze. Very, very indicative of momentum, not necessarily a short squeeze. We'll take a look at the FinTel data right here. You guys can see, well, I just want to look at the short shares availability real quick. About 350,000 today, so there's more available than there was earlier into today's date. There was about 35,000, which means more shares were returned. So 2 days ago there could have been some short covering. They have the borrow rate at 87 compared to I think 160 on Ortegs. Then the short volume, this one was interesting for ATER because in the past 2 days it did spike up to 52% right here, past 2 days, right? It was about 30 to 20, seeing a high of about 38 on 9/15. And I think maybe that explains this weird candle right here, right? Because that candle is just weird. I don't know why it's there. I don't know why it's at 8 a.m. I don't know why there was such a huge sell-off. And yeah, it's just weird, but short volume did go up. I'm sure dark pool activity went up as well. Failure to delivers, we can still see this is on the SHO threshold list, so there's plenty of failure to deliver still happening in ATER. And that's about it for the video. I hope you guys have enjoyed. I hope you guys learned something today. I do think there could possibly be more potential in ATER, especially because we did see that very solid bounce off of that support beam, that diagonal trending support beam that was going up. We saw that bounce. So if bulls can continue to push this thing up into the after hours and keep it there, I do see next week being green at the beginning, because there's still that high cost to borrow, still a high short interest. It's still driving attention to retail investors each and every single day, such as myself. So I do imagine the momentum should continue. There's weird activity going along with shorts, just considering that huge candle that we saw yesterday at 8 a.m. to the downside. It's unnatural. It doesn't make sense. And that's just manipulation right there. If there is a cryptocurrency, if you just compare this to cryptocurrency, for example, if there's a cryptocurrency that people are bullish on, a cryptocurrency will 10x. People like us, meme stock investors, cryptocurrency investors are somewhat similar. There's like an altcoin that's gonna go up and it only has a 500 million market cap. That thing could get to 10 billion very, very easily. To see a penny stock or a meme stock or a high short interest stock go from $500 million in market cap to $5 billion in market cap, that's so difficult. That's so rare. We rarely ever see it. And I think it's because of Wall Street, guys. I think it's because of the people running the show. They're manipulating stock prices left and right. And it just sucks. I hate to say it. It sucks. It sucks that we don't get the 10Ds or whatever we deserve, the money that we deserve. And it kind of just feels like we're getting stuff stolen from us in a way. They're profiting off of us by doing these manipulative tactics. But that's just the stock market that we live in. You have to vote for more regulation. Got to email Gary Gensler. Got to do your part as an ape. And that's all I have for the video. If you guys enjoyed the video, make sure you guys leave that thumbs up. Make sure you hit that subscribe button for more and hit that bell so you never miss a beat here on this channel. If you're new, check out that link below in the description or in the pinned comment section to sign up for Public. Public is a great stock brokerage on your phone, and they're giving up to $70 in free stock just for signing up and depositing at least $1 on their platform. So it's basically free money. And guys, that's about it for the video. I hope you guys have enjoyed. Have a wonderful weekend. Peace.